Okay, so welcome to part 2 of the India market review for 9th of September. This is the new format we're going to try out for some time and get, like I said, please give us your feedback. They're going to, IMR is going to be in 2 parts. Part 1, which will just do global indices and Indian sector indices, and we're going to have a separate webinar on that, and then we're going to break and then have a second webinar where we're going to do individual stocks of the sectors or the index that we want to focus on for that webinar. And today we want to focus on the Nifty Junior ones, right? So in the earlier section in part 1, we basically identified that these are the basic opportunities which are probably there in the market right now. These are what you want to short. This is what you don't want to short. You don't want to short reality. You don't want to short capital goods. You don't want to short consumer durables, and you do not want to short PSU banks. Longs, everything is iffy. Maybe consumer goods and consumer durables and capital goods, but that's iffy thing. What's probably very clear, or not what probably, what is very clear is this is where basically the opportunities are. Okay. Having said that, for a long time we've been speaking about how the mid-cap space has outperformed the Nifty, and that's what we will look at today after a big gap of many weeks. So let's jump in. And so I have on my other screen the list of Nifty Junior stocks in an alphabetical order, and that's what I'm going to use as my reference to do a quick review. And the way I want to do it is because we are all probably looking at this after a long break, is I want to very quickly look at all these stocks from a long-term, weekly, maybe even monthly perspective, and then quickly find and locate trading or investment opportunities, if any. Right now, the thing about the Nifty Junior or the Nifty Next 50, as it is called now, is almost all the stocks I think are in the FNO space. So when it comes to shorting, you should be able to short them without thinking too much. Of course, just confirm that by looking at it and seeing if it's there in the FNO space, right? Okay, so let's start with ABB. We've actually said capital goods should probably not be shorted, and if anything they should be long. You're looking at basically 2015 being a year of consolidation, looks like, for ABB, and from short-term perspective, really nothing much to say about it, and I would say just stay away. A little bit of a confusing signal because it's come down clearly on low volumes now and it's gone up on high volumes. Essentially, it needs to break 1,210, so you want to put an alert. If that was 1210 breaks, then and on volumes, good to go long. But if it breaks below 1140, then you want to go short. Really not a great setup in terms of risk reward, so we're going to skip on that. The next one in our alphabetical list is Apollo Hospital, and last I remember we spoke about this from a wedge perspective. You can see that wedge now on your screen between those two red lines. And what's very interesting on this wedge is, while it did break down, let me actually make it yellow. Right, so while it did break down, it really didn't go down in the way one would expect, or it's been described in the books as sort of formed a consolidation, if you will, in the sense that it's like this is a weekly chart, a left shoulder head, a right shoulder, a sort of inverted head and shoulder pattern. But 1400 clearly seems to be a strong resistance for the stock right now, and the way it's just getting beaten down at 1400. I've gone to daily now. Right. I would think now that it's broken this long-term moving averages also, it's done that many months right now, but given the overall negative bias or the downward bias I have on the overall market, I would say, yeah, you could short this, though probably the best opportunity was at around 1400, 1410, 2-3 days back, but you could short this with a stop loss around 1370, 1375, with at least a target of 1330 and then most probably 1290 or even 1300. Okay. Next, looking at Ashok Leland. So this is was an excellent performer for many of us in the, I would say, mentorship group for 2014, 2015, and then of course all good stories come to an end, and probably this one has. Though in the larger scheme of things, I would say that what you're seeing here, so let me just freeze it for us first. Right. All right. So from 2013 onwards, weekly chart, big spectacular rise from about 15 bucks to 10 rupees, and now it's basically undergoing, I think, a well-deserved correction. Okay. If all these things that are expected to happen with the GST bill, some reforms, etc., the commercial vehicle sales have beginning to pick up. Okay, and Ashok Leland is a strong player in that. And looks like it's really found some good support at 86 rupees, right? So 86, 84 seems to be a good place. So in no hurry to, I would stay neutral on it. Basically, I wouldn't want to go long or short on it. It could actually be a buying opportunity. There certainly is some bullish divergences which are there. Let's mark those out. So this is where this is, and this is where that is, right? So definitely some bullish divergences there. Even on the MACD, it started to, crawl up. Oops, sorry about that. That's what happened. 1 second. Right. So all in all, but a little too early to, I think, jump in given the bearishness in the overall market. Watch it carefully. I think, well, there are two ways of doing this on Ashok Leland. It could either be a very good long opportunity, and you basically then need to watch for, where is that? Basically this level to break, and that is 89.35, 89.30. And if that level breaks, then definitely one would want to look at going long, except that at around 92 to 93, there are plenty of resistances. So there's a whole resistance zone on top and a support zone at the bottom. If you are one of those patient investors, traders who can perhaps wait many weeks, not a few, probably many weeks, then sure, it jumped from 82 to 88, that's a 10% return, but that's all in retrospect. And this could be, if you think about it, you've had a correction here. Let's put that down. That's the trend line you want to be sort of watching. You've had that correction, and it is just at that trend line. It could break, then that resistance breaks, then all those moving averages break out, then you definitely get a strong uptrend. And it could be that this bottom has been put in place, right? So if you're willing to, run through the volatility and the downside because of the overall market, then fine, look at it. Otherwise, if you're not the patient type, then leave it. The reason I'm sort of diffident about this is because I would have actually loved to buy this if the overall market was bullish. It's just that it's not, and that's why. And it's also at a very nice critical juncture at this, what do you say, downtrend line, and it could break out. It could be a resistance. It would come down, and that's what basically you want to watch. Okay. And then next, Bajaj Financial Services, right? So this one has just been Fin Ser, yes, right? Just going up and up and up, and Today, very strong bearish engulfing. Okay. So that's the weekly chart. The stock's gone from basically 600 rupees to 3,000 rupees in 2 years. Are we looking at, okay, let me just step back a bit. I'm just trying to do a very quick Elliott wave count and see if we can find something. Okay, just sticking my neck out. This is, this whole thing is wave 1. We'll not get into the subwaves right now. This is 2, and this is 3, and in that 3, this is 1 of 3, 2 of 3, 3 of 3, 4 of 3, 5 of 3. And then we need to get wave 4. Now, if that is the case, right, then we are possibly seeing quite a bit of a correction, and I would definitely not want to be in this stock long at this point, right? There is nothing on the volume side. On the volume side, actually, everything is indicating that you should just buy whenever you get an opportunity to go long on this, right? And actually, come to think of it, that fits in very nicely with the correction. This is a stock that could perhaps come down to these levels around 2700. With the sort of bearish engulfing today, I would definitely not be in a hurry to buy it, right? So around 2700, I would think about perhaps getting in. Maybe I don't want to short it either, because I'm seeing the strong volumes on the upside. But if I had the stock, I would exit and I would wait for lower levels to perhaps re-enter. Then we've got Bajaj Finance, which has okay, sorry about this. My data is not adjusted. So this has clearly had a split. 12,000 rupee almost has become 11,000. Yeah, so it's a 1:10 split. I'll just have to get back to you on this. But I suspect it's more or less a similar story like Bajaj Finance, financial services, right? If you look at this part, okay, this was a correction and then it has gone up, and if you go to Bajaj, what we saw earlier, this is what exactly we're talking about. This part consolidation has gone up, and I would say basically a copycat image. Don't want to be shorting either. I would prefer to actually, okay, have a rethink on this. We're talking about 2700. We're talking about the stock at 3000 right now. That's a 10% correction on the downside. That's quite substantial, right? Okay, so I'm going to restate this. I think I would definitely want to, didn't observe that in the earlier part. I would want to short this Bajaj Finance and probably similarly, Bajaj Financial Service and similarly Bajaj Finance, simply because the downside is quite substantial. I would put a stop loss at around 3100, or if you want to really be, you're okay with 3160, 3165, that would be really a good stop loss. Okay, that's almost 930 rupees up from where it is right now. I somehow feel it's not going to break 3100 right now very quickly. And on the other hand, you've got a 300 rupee downside. That's a 3:1, 6:1 risk reward ratio almost, and that's quite a good one. So I'm going to put that here. Shorts, Bajaj Finance Services, and also Bajaj Finance, I would think, right? I need to check chart. All right. BEL. So BEL. Okay. Right. That's a consolidation going there. Okay. There is no doubt about this stock. This is like a 1.5, almost going to be 2-year consolidation, which is going on in BEL, and again, capital goods space, neither a strong short or a long from a short-term perspective, given that it's just at the long-term moving averages, may actually be a good place to buy. You're seeing very low volumes happen over the last 2 months. It could quickly break down, or it could just jump up. Very iffy. Problem with setups like this is it's a 50-50. If you're a long-term investor, as in 6 months plus, I would say you could buy this, and any downside just accumulate more. Very unlikely to break 1040, 1020 in my opinion. If it goes on, just keep buying more. Why start maybe accumulating now? Because from here it could just bounce up. But again, given the overall weakness in the market, I would be a little not too much in a hurry to jump into the long side at this point and just watch this trend line. Right, so no long, no short, but at lower levels start picking up BEL. This is a long-term investment, in my opinion. What's happening? Okay, right. And at some point in the next 6 months to a year, is going to break out of this consolidation, and once it breaks 1400, then you're going to see much higher levels. So at any lower level, just pick it up. Okay. Then we have Bharth Forge. Right. So Bharth Forge, if you look at it from a weekly perspective, essentially had a fantastic run up from 200 to 1300 in the last 2.5 years. Now a nice correction, and I would say it's formed a double bottom, right? So you've got one bottom there, you've got another bottom there, and this is a weekly chart, remember. So over 2016 it's made a double bottom, and I would think unlikely to break 1700. We've had a 50% correction on this stock, basically from 1300, 1400 levels to where it is right now, right? So from 1350 to 700 is where the stock has come. I somehow do not expect it to right now break the 700 level on a decisive basis. It probably got out strongly on this candle, so let's have a look at that. Yep, some massive volume there. Right, so something is definitely cooking, some sort of institutional promoter, HNI buying going on there, and again, it's in that sector where you don't want to either short or long. Bharat Forge would be one more, where I think at around 800, right, would be a good place to go long, right? So longs, BL, Bharat Forge, okay, at lower levels. Right, about 750, actually, 800. Why? Because again, good support, good long-term moving averages, double bottom in place, triple bottom maybe, even if you like sort of take this one area, 2 and 3, not just taking this down right now. But again, for somebody who's patient, this could be something that gives you 30-40% returns in 6 months to a year. Right? Okay, so that's Bharat Forge. Britannia. So part of the FMCG space. So you can see that clearly this has broken out, made a new life high, no doubts about that. Quite a sharp move from about 3,000 to 3,500. Something again triggered this stock. As you can see, some fantastic volumes, and after some profit booking that happened in this part, it just continued to rise up. So again, not something that you want to be shorting, but at lower levels you probably want to pick it up. And if you are a patient investor, then sure, go ahead, buy it. But this would definitely be something to buy on any dip. Place where Okay, so 3000 is place of definitely good support. It's unlikely that it's going to fall about 14-15% right now. And as a matter of fact, if I look at this on a weekly basis, you might actually be seeing a nice flag here on a weekly basis. So you've got a 3-week flag, let's say a 1-month flag, including this 1, 2, 3, 4. You've got a very nice spike here. You've got about 28 to 33. That's about 400, almost about say 18% consolidation going on, and for all you know, it's going to break out again. So from a end of the year perspective, right, this is a stock which is probably going to be hitting 4,000 bucks, right? So yes, maybe accumulate some, don't be in a hurry to um, um, uh, I mean, accumulate some. Just reconsidering my thoughts. Thinking of saying wait for a correction, so that's what I'm saying now not to do. Actually, that's like a long-term flag formation. So you could buy some, and then the flag breaks out, then 4,000 is on the cards. So that's a good find, I think. Right, nice setup. I like the picture. Cadila Healthcare. So pharma, we said last week. Actually, we forgot to do pharma this week. The sector index. That why is this like this? I haven't seen it for a long time. Okay. That the whole entire pharma thing, after about almost 2 decade secular uptrend, I think has now run out of breath. It looks like, at least for some time. So not in any hurry to buy it. And I would come on. This is a problem with this software sometimes. Yeah. Okay. With the picture, the way it is set up, it could actually be, watch this. Just take the best fit line. Right, so looks like a rising wedge, right? So not a very healthy picture to be in. However, what's a little different about this rising wedge, I would say, is the fact that it's so close to its long-term moving averages. Generally, stocks tend to just drive up very sharply and then form this. So I think it'd be a good thing to academically watch this, nothing to really trade at this point. So giving that a pass. Kane. So last year, sorry, the last one we said, it's a good place to be in. Wonderful recovery from 120 to 200 on the stock. Right, symmetrical triangle. Nice volumes. You're seeing some profit booking, in my opinion, right now. The stock could fall to 170, 200 psychological mark. That's where it is basically bidding its time. You don't want to, again, nothing compelling as such. 190, 175 would be a good place to enter. Actually, it could be a good place even now. Remember one thing on this oil drilling stock. So in the northern hemisphere, winter is going to be setting in about a month or two, and then that's typically when your energy prices tend to go up a little, because there's a much more energy demand for heating and warming. Um, so it's when I find myself feeling a little itsy bitsy iffy and all, that's the time when I don't want to do anything with that stock. So I'm going to stick with that. 200, it could bounce up, go down, nothing very compelling. But if you notice, there are these high volumes that have happened in the last 3-4 days, and then about a month, 2 months back, there was extremely good up volume. Now, is this profit booking or is this shorts or people getting out? Again, very iffy. I would leave it. Okay, Castrol. Okay. So Castrol broken 290, and all right. So this is at, I think, again a very critical point. I think we might have found a good shot. Right. So watch. So that's the life high. Where did that go? Right. So approximately there is the life high on a closing basis, and then we've got the next so probably support resistance zone somewhere there. Right. And this is where some good support was, and right now this is the downtrend line which is there, and it's very much, I think, on track to make probably lower lows on the daily basis. So the thing about Castrol, if you look at it fundamentally, I think it's it's fall from 380 to what, about 300 now. That's about a 20% fall. It happened basically because crude oil prices, its basic raw material for input raw material, have started to rise, and it's obviously going to take a hit on margins and profits. Now this could be again, I'm saying could in big COULD, a similar opportunity as we saw in Wipro about 1.5 months back, which is sort of left shoulder complex here, big head, and a right shoulder complex there. And I just want to check volumes. Okay. Yep, it's being sold off on clearly higher volumes. Castrol is definitely a short, right? Right, and a good one, I would think. Okay. And well, ideally, this is when I always tell myself we should do more of mid-cap stocks more often. All right, so nice rounding top here. 300 would have been a wonderful place, psychological mark, etc. Anyhow, now it would be a stop loss above 292, 293, and your target could be, basically it needs to break 285. That's one thing to keep in mind. But once 285 is broken, then I think on a, it's at least 264. Okay, at least 264, 265, and then the next level is somewhere there at 244. Right, and if that breaks, then the 220, 200 is also distinctly possible. So this is something I think is a positional shot. You can look at maybe on Monday morning. I think it's going to be opening at least 1% down with the overall market sentiment as I see it. Right. Okay, so that's Castrol. I think we found a good setup. And then Colgate-Palmolive. Okay, I'm going to do a pass on this one. You're consolidating. It is, jumping around, a lot of volatility. Okay. Encore. Container Corporation of India. Okay. I think I'm going to pass on this one too, because it's at this, accumulation of all the moving averages there, and anything can happen essentially. It could jump up, it could jump down, and to add to that, the volumes are you know, clearly going down. So you don't know where the market is going to go with this, what decision it's going to make. Generally, our options liquidity is pathetic, but if you could, I would have sold maybe 1320 put, and I would have sold the 1450 call. I have a short straddle basically, right? And then a short strangle, sorry, and just left it at that. But well, we can't do that. Okay, so we leave Concord, Container Corp. Cummins India. So again, back to capital goods. Okay, clearly making some. So here's the thing, right? So one nice long correction, some big volume sell off, and then it just you know, it's able to bounce back up quite nicely after that. And if I look at this, okay, so basically broke this downtrend line, and then is, you know, going up with higher tops and higher bottoms. As you can see, the volumes are a little not so happy at all, right? So there's but what's nice is it's got plenty of good support at lower levels. Wait for a correction maybe till 890, 900 to buy, or a break above 960, otherwise leave it. Okay. Cummins, Dabur, FMCG. So well, that's clearly 320. It's turned down. Nice double top here, right? One sec. Okay, folks. Correction. Thanks to Sandeep for Sudeep, sorry, for pointing this out. So Castrol, actually, that was on an unupdated chart. That was till 2014. So Castrol, I have to take that off. Okay. So essentially, the symbol has changed, the company has changed the name of it, and it's Castrol India. But unfortunately, right now in my database, I haven't combined these two symbols. I will do that later. And so Castrol is actually now Castrol Ind. Okay, so Castrol is actually now at no, going up. Okay, 1 second. Right. Okay. 2015, 16. All right. So what I was saying about increasing input costs, well, right now, obviously that's not making any difference to the stock. So that's the thing about TA. You want to stick to TA, or you want to, you know, add something else. You can always find something else. So anyhow, so 365, a big 365, 370, a good support, obviously. From where a triple, quadruple bottom it has taken off, and the thing is the volumes are really, really good, right? It's being bought on some very strong volumes right from May, June this year. I suspect something is going on, right? Something is cooking in this stock, and we have a flag pattern here, I would say, right? So it's come down. These are sort of setups I like when, I mean, this would have been mid-August, nice, lot of support. It was at about 400 there, it's 470, almost a 20% move. And we are looking at sort of flag there. Okay. And once it breaks out of that, then we should perhaps get another 40 rupee move, so that will make it about, say, 500, right? So 500 as the next target is, I think, a very reasonable expectation. And then 500, not only a psychological resistance, and 520, 530 is definitely on the cards, right? So Castrol could be, well, we'll put it on the long side. change of view. Castrol Ind. Right, so I need to get that combined. Thank you. Okay. What's next? Divis. Yes. Need to look at Divis. So this is well, definitely taken off to a different orbit. Something in the pharma space, which is definitely doing much better than many of the large cap pharma stocks which are in the Nifty. And this is definitely a buy. Let's confirm that with volumes. Yes, this is a buy. This is stock. These are stocks. Your Castrol Industries and Divis are stocks you want to buy if the market falls and accumulate even more really good setups. I would think 1,500 is the next logical, you know, where it's going to reach. Take a couple of weeks perhaps, right? But it's definitely getting there. So Divi's stop loss below 1280, 1285, and once it clears 1365, 1380, it's I would say 1500, right? So Divi's is a buy. And then DLF. Right. So DLF is the major weightage in the realty index, and the thing about DLF is that it's got this long-term downtrend line, and that's, you know, in a sense almost the most, if not the most, but just about the most extreme downtrend line from 2010 that you can put, and it's basically a doubler from its lows of 80 to 160. And if it breaks that downtrend line, and that's a multi-year, 6-year downtrend line, remember that, then technically we are looking at a very nice setup for where it could just keep going much higher and higher. The volume is a bit of a concern, I would think. Right, looking at PVT and OBV. Okay, this is nice. This is a really nice picture here that you're seeing on the on balance volume indicator, PVT indicator. So okay, overall there's still accumulation and strong buying going on, even though on the day by day picture here you're seeing the volumes correct. So DLF I would think should only be on the long side now, and any dip 150, good psychological thing. It might find a challenge to break out of this downtrend line, may come back even to 140, 135, but I think in all circumstances it should be looking at long only. But what is likely to happen is that once it breaks 165, 170, you probably see a rapid rise, you know, something like a strong Marubozu candle, and just go to 200 for all you know in a blink of an eye. So I think good one to accumulate and hold on and just have patience on DLF. Imami Limited. Okay, so another in the FMCG space, right? 200 rupees stock about 3-4 years back has become a 6-bagger now. This is a nice, you know, sort of consolidation which is going on, or this is sort of what you say, cup if you want to call it, a bowl, but after an uptrend, and that's a sign of consolidation. So from 1400 came to 900, spent about 6 months there, and then now on its way up again. So Imami, yes, on the long side has broken 1150 and should do 1300, 1350 in my opinion, right? And could come even to, yeah, looking a little hesitant in the short term. So it's not a great setup, but good enough if you're from a trader's perspective, or an investor's perspective rather. Below 1125 you want to get out, and once it clears 1240 it should go much higher too. Maybe probably just gradually climb its way back to 1350, its life high, and then what does it do after that will really be the question. Okay. Glaxo, fallen off. This, you know, when supports break, this is what happens, right? So something basically triggered off on Glaxo, obviously, there. Thinking some sort of result or corporate action or something like that. It was July. Yeah, you saw the sell-off happening. Well, nothing sudden, but clearly something definitely, right? And maybe now some accumulation going on. Like clearly, okay, that's one thing which is very, very strong on Glaxo right now, which is a bullish divergence. And it's a pretty strong one actually. Okay, so that's a pretty strong bullish divergence in my opinion. Just need to be very patient, that's all. Right, 3000 psychological mark, that's cool. Right, would want to track that. It might, for all you know, it will break below 3000 a bit. Uh, Maybe do something like a false breakdown or something like that. But as long as sitting there, as you can see, right, just dilly-dallying around 3000. The challenge will be, what does it do? Does it, you know, take support there, which is like a 2-year thing, or does it break out? And I think right now it's uh, it's tough to take that call. I would be very cautious. Whether I was long on short, I would be very cautious on this stock. Really nothing. I think I would say something happened here on, what day was that? 31st of August, where some massive, it moved from 3,000 to 3,300, 10%, and then just got massively sold off. See if you can identify this news. If you get it, just do share it with the rest of us. Maybe we look at it with some fundamental or some event-based thing. The only thing is plenty of moving averages sitting right on top to give it plenty of resistance. So, and if you think it could be a good place to get in and just, sit tight, or but if it breaks 3,000, then what's the downside? Let's see. Okay, I don't think we have anything good till 2,700. That's a 10% downside. So I would just, sit and watch. If it was possible, on liquidity basis, I would perhaps just buy both a put and a call 3,000 strike of Castrol and leave it. But given our pathetic liquidity, it's unlikely that you can do that. Okay, so that's black. So then Glenmark. So I remember I'm seeing this, like we saw Divis doing well, we are seeing Glenmark doing well, which is just a complete different basket from all the large cap pharma stocks. And I'm thinking this is exactly the picture we saw, I think about, I don't know, 6 months to a year back, if my memory serves me right, where the mid-cap pharma was doing well, but the large cap pharma was not doing well, right? And are we seeing a repeat of that? Glenmark is definitely a buy. There's no doubt about that, right? You can see the volume buying that has happened on Wednesday and Thursday. Today is just a correction to 896, 900 basically psychological. 900 breaks, 1000, that's a 10% move is definitely possible. I'm putting Glenmark on the buy list. Okay. Right, Divis was also there, right? Divis had a flag. Okay, breakout of 900. So that's what we want to see on Glenmark. I would definitely say Glenmark can be gone ahead and be bought. Lots of good support on the lower end and easily coming to 1,000 and let it take, I don't know, let it take 3 months. It's okay. You got a good 10% return in 3 months. Okay, that's to move my sheet down. Okay. Godrej, consumer products, okay, there, back to its life high, just there, bearish engulfing, and could easily, oh, look at the volumes. Okay, this is another definite buy in my opinion. This is buy it. Uh, Could easily go to 2000 rupees, except that not very good. You don't have a really good stop loss at this point. You could just use 1600, 1480, sorry, 1580, 1570. Unlikely that is going to come down there. Good volume buying, something consolidation going on here, and should see 2000 in a few weeks or months. Then GSK Consumer, the FMCG. What happened to this? Big fall. Looks like just an emotional crack. No volumes, right? Just fell. I mean, low volumes totally. Uh, if anybody is in for a high risk trade, I would say buy this with a stop loss. So it's at 60, right? No, very close. 6128. It's close at 6128. You could buy this with a stop loss at around 60 40, 60 20, right? Because if it bounces back up in the next week or two, you could suddenly see it back to 6,300, and that's like a clear 5% return for you. The volumes are really tapering off, except that you're seeing some, big, large red volume sticks. That's really not healthy. But from a long-term perspective, okay, so from a long-term perspective, it's just consolidating. Okay, this has been just been consolidating for this whole year, essentially. Right, so unlikely it's going to go below 5,500. It basically needs to finish this consolidation phase, and then you're going to see the next move above 6,800 and all. So clearly consolidation, right? As a matter of fact, I would say all the way to 5,500. If you're in the mood for it, just accumulate this and be very patient. Don't expect a big move unless some event happens, but yes. Okay, Hind Petro. So this has been something I've been just saying. Hind Petro, BPCL, IOC, just keep buying, buying, buying. Long-term investment portfolio. So you can see, all this volume stuff here, and it's just being bought even more and more and more. And I would just essentially leave it at that. At some point, it's going to break 1300, and life high. When it does that, you'll probably see it go to 1500, and then eventually 2000, maybe 6 months to a year later. For the first time, I think I saw quite a nice, well-made ad about Indian Oil Corporation on TV yesterday or day before. I'm not sure. So wondering what that is up to and why they're doing that. Are they coming up with an OFS or some dilution or whatever? I'm not sure. Okay, so Hind Petro, that's the long term. Hindustan Zinc. So that's it. Oh, right. So this one, some data missing. It's only 2003 and all. Okay. So Hindustan Zinc, basically, one of the things to notice is that about 1 year, from July 2014 to July 2015, it just consolidated. Sort of, in retrospect, you would say it's a distribution phase, and just cracked from 170 to 120, and then after that it's been just not looking back, and then it's just doubled. What next? Well, it's clearly been bought with high volumes here, but this could be a rounding top, and that's the concern, right? So is this a rounding top, and is there a temporary halt to Hindustan Steel there, is basically the concern. And you definitely have a neckline here. Okay, there about, and it has, today broken down through that, also recovered very nicely near the 50-day moving average. I would say short it with a stop loss above 226, 227, could go back to 210, and if that breaks, then even 200 is a distinct possibility. So I'm going to put that on the short side. Okay, let's see. These are all like creating a watch list, right? It's not like um, these are the trades you must do, but these are the ones you must watch, and when the trade does happen, then get into it. Bull Housing Finance. All right, so this has well, okay, so broken its life high, but now come back and testing that again. And the thing is about the way these rounding tops are looking to me. Okay, not really convincing, and of further up moves, and you had a bearish divergence there, as you can see, right? So this is something else which basically you got to keep in mind, and I think this could come to 750 in my opinion. So Bull Housing Finance, I would look at shorting it with a stop loss at around 810. I doubt it's going to go back there, right? So now we're beginning to find shorts, quite a few of them. IOC, Indian Oil. Alright, so that was a flag that was marked there long time back. Okay, so again consolidation going on, broken out the new life high 450 to 600, and then again one rounding top that we are seeing in this stock. But look at the volumes, amazing volumes. Okay, so IOC, wondering of connecting that to the ad that I saw recently. Something cooking, I would say. Some plans are being made as far as IOC is concerned, I think. I would not want to short this, but I think it will come to about 530. It's 30 rupees, almost 7-8% down. You could look at shorting it, but overall the larger trend is on the upside. I would just say wait, see how this pans out. When it comes to 530, you might think about actually going long. Okay, JSW Steel. All right, so that has actually broken out of a very multi-year, 8-year, triple, quadruple type massive top. It's gone from 1400 to 1900 now, and is now consolidating, right? Still, this is a stock which is only for the long term. I would say long term trend is up. You don't want to be shorting this ever. 1750 is good support. If it breaks 1750, then 1650, then buy more. At this point, watch for it to maybe correct to 1750. Then careful. The problem with this is that it's really run off from its long-term moving averages. Some sort of a correction is required. No shorting, but if and when that correction comes, one should definitely look at going long on it again. Okay, so that is JSW Steel. Then LIC Housing Finance. All right, so that really broke the life high and has corrected a bit. Where is that? So this one also after its move. Again, overall, I would say on good volumes, up, good buying. Again, not something I want to be shorting. Would want to, look at buying it when I get a correction. You can see very strong green Marubozos, small red ones. Again, strong green Marubos, strong. I mean, weak, small, weak red ones. Again, it's going up. So maybe around 550, 550. Watch it every day. At some point, you're going to get a good buying opportunity on LIC housing. Then Marico, so struggling with its life high, okay, of July, August, really no change. What a move, what a move, wow, look at that stock. 2008 20 rupee stock, it's now 300 rupees. When will we ever get multi-baggers like this on an individual portfolio? Okay, I would say overall right now just consolidation going on. Okay, nothing of a great hurry, and long term, guys, you could think about entering it if you want, but I would perhaps wait and watch. Actually, it's probably done, this move here, 50-day moving average taken up. Again, just being hesitant because the overall market is weak, then you don't want to be too aggressive on the long side. On the other hand, you don't want to short this either, so we'll leave this. McDowell, I don't know if this is impacted by Malia anymore, right? But 2300, that's at a 3-year support level. Overall, if I were to look at it, is the trend over, down? Is this a recovery? It could be. This is a weekly chart. Remember, this is, well, it doesn't, well, it could be. Looking at volumes, there could be some buying going on here, looks like, right, at this 2300 level. But again, I look at the daily chart, we get doubts because you've got this massive sell-off that happened in August. Now you're getting some buying. Okay, leave it. Too many resistances on top to cross and could still crack. So could be a good shot, but actually from a short perspective, it's got a good setup. Stop loss at around 2410, and if it breaks 2300, then 2250 is very, very likely. Okay, I'm not sure how much the liquidity is there on this though. Okay, Motherson Sumi. So this was a stock which went really well from 50 rupees to 300 in 4-5 years, and then corrected in May, June of last year, 2015, right? So from 300 it came to 230, and I think somewhere either here March this year, right, is when that Volkswagen thing, the scandal, Dieselgate thing broke out, and then this just collapsed because of that. Major suppliers to that EW group, and then it's recovered from there, 230 to 360, and right now, okay, so good strong resistance at 355. I would not want to short this. I would want to buy this at every good opportunity, even at about 300. As long as it doesn't break 290, it's okay. That's still a 10% fall, but still, it's being accumulated is what I think. Let's look at the chart. Yeah, okay, it's really not being sold off anymore. There was some big fall here, probably some news or some event that triggered it. But, it has to basically break this 355, and then once it does that, it will just go back and create new life highs. Maybe a little circumspect right now. This is a like 1.5 year consolidation that's going on here, and of course been hit by global events, and should go back up. Yes, wouldn't be shorting it. NHPC, wow, that's a big mover. 17 rupees to 28 rupees for public sector stock. Oh, this is really interesting. Wasn't expecting to see some massive. I don't expect to see massive up moves in PSU stuff. Where down moves, yes, but massive, very fast, good up moves, very rare. Right. So what's very interesting is it's there. Right. This is a multi-year, 6-year resistance level where it has come to 28, 29 multiple times and has just been beaten down on a very regular basis. Okay. Now the question is it going to go back to 20 or is it this time going to be different? Let's put volumes. There's nothing in the volumes picture. Well, the MACD is the highest it has ever been on the monthly chart, and that's not yet the case with the weekly chart. Okay, why take unnecessary risks? I would put an alert on this for about 30, and look at volumes. If it has then got good volumes above 30, then I would buy, because then after that it could go to 35, that's like 12-15%. On the other hand, for some reason, if you believe there is some hope in this stock, and let's put a trend line. Okay. Okay. Nothing in it. No volumes this way, that way, just rounding tops. Nothing compelling. It could come to about 25 or even 24 and then turn back. Okay. I would watch it to cool off and then maybe buy, but not in any hurry to do anything either way. NMDC, this is interesting. I think, whoa, what happened on Wednesday? 100 to 114. There's some court case verdict about Supreme Court allowing you to do some dual pricing or something. So this one, I think long term should just be accumulated. For 2 years downtrend. It's a lot of um, the bad news, I think, fundamentally also is out of the picture, and now it's just trending up. And the short term, if you look at it, everything is being high volumes. Every correction is being bought into. Some good supports at lower levels. If it comes to 105, in case you get there at about a 4% drop, then buy it. 110 could be a psychological mark where it takes off from. I'm sticking my neck out and say buy NMDC on any correction, and target will be 125, 126. Yeah. So OFSS. Well, has it cracked just like any of the other IT stocks? We've been bearish on IT for more than a month now. Yep, I think it's going to go to 3,200. But still short it with the stop loss above 34.10. 3,200 is definitely on the cards, I think. And once that breaks, and we will review, because 3200 breaking will be a major thing. I could easily fall to 2800 after that. Okay, but looks like it is getting cracked. I think it will go down more. OFSS. Oil India. So Kane, ONGC, all that is buy. So 300 has become 400. That's 30% exactly at that mark actually. So there you have it. Wow, what a recovery. So 600 rupee stock fell to 300. Now it is at 400. The thing is, suddenly after this massive rise from 300 to 400, we do not really have any correction is part of that. So wondering, I think 440 could happen before maybe it corrects. Yeah, just looking at this is could be wave 1, 2, 3, 4, 5, an extended sort of move has happened here. There's no doubt about that. Okay, so again, this is tentative, just sticking my neck out. This is on a weekly chart. Since some of you here have done the Elliott wave thing, from here to here is probably wave 1, right? Right, and if we're not going to get into sub waves, Elliott wave. Just this is wave 1, this is wave 2. Then from here to here, you've got wave 3, right? This is looking like wave 3, like impulse. This is 4, okay, and this is 5, right? So 1, 2, 3, 4, 5. So if that entire bigger wave 1 is over, then some correction could be expected. Now the thing is that the volumes actually have picked up as of now, and it's looking like it's more likely to go up than go down. So in the short term, it looks like it's going up, but I think there's a correction in the making sometime. Maybe it'll come back to 360 or even 350 later, right? But I think in the longer term, we are good, and we're looking at 440. So if you can live with a correction to 370, 360, and then 440, fine. Or we could see 440 first before it comes back down, right? Either is definitely possible, right? But, yeah, this is looking long, short term a little iffy, long term bullish is what I would say. But even if you, even without Elliott wave, forget all that. Just notice that it's really been going up on overall good volumes right now, and good supports at around 370, 375 levels. 400 breaks, 10% upside is clearly on the cards. So I think either way, wouldn't worry too much about the correction right now. Look at buying it. EFC, Finance Corporation. Oops, sorry, looks like another split here, which has not happened on my chart. We'll do this later. PGHH. So Procter and Gamble. 7,500 came down to 5,200, back to 6,800. I think just a correction right now. One could look at buying it at around the current prices. Oh, sorry, hold on. Good selling off happening for some reason. Just wait and watch. If 6550, 6500 breaks, then this could easily come to 6300, and then we'll definitely have some trouble for us. So wait and watch. Wait and watch, because plenty of support on the downside, being sold off on high volumes. You could go short, but it could very well be bought back very quickly because that's support, etc. On the other hand, could take support now. So it's like neither here nor there. That's why stay out, neutral. PD light. So this is another been a multi-bagger stock, hasn't it? 10 rupee stock in 2003 is a 700 rupee stock. How many of us have that sort of long-term vision? In 2008, it fell from, it was a 100 rupee stock, fell to about 40 rupees, and then it's still now 700 rupees. Great. Okay, so big consolidation has gone up again, and matter of time, I think this stock will be, you know, 1,000 rupee stock, so that's about 40% upside from here. The volumes on it have just been increasing. You look at this monthly chart, the volumes have been increasing. Very unusual to see stocks like this, right? Obviously something very fundamentally good about this company: product, sales, marketing, design, brand recall, customer acceptance, all that. And I'm also sure financially, in terms of profitability, it must be doing well. So that's just a guess. I haven't actually seen any data. So stocks like this, you never want to short, number one. And at any opportunity that you get to buy in more, you just buy in more. However, from an Elliott wave perspective, um, 1, 2, 3, 4. Again, if you start with say 0.0 here, this is wave 1, wave 2, wave 3, wave 4, and then wave 5. So are we looking at one massive move on a decade cycle, 1, 2, 3, 4, 5 getting over, or could we just get extension after extension? If you look at the fundamental data and all, we'll probably go and tilt toward the extension side. So, and because on the volume side, it's just amazing. I mean, it's not something I've seen, I think, ever. I can't think of any other stock where I've seen volumes like this on a monthly chart. Right? So this is spectacular. So yes, no shorting, only buying. Any short, I mean, any correction, just buy it and just be patient and hold on to it. Could go much higher from where it is right now. Okay. PNB, whoa, PSU banks we said buy, so here is your buy. You can see that even today, when the markets have fallen, it has actually gone up. And as a matter of fact, last IMR both SBI, PNB, we said buy, if you remember, you would have made money. Last time I've been last Tuesday, actually 3-4 days back, we would have made money, and I don't think this is coming back anytime soon. If you're a trader, put a stop loss below 138, 137, and just patiently hold on to it. And once it crosses 150, then maybe not, probably perhaps not very quickly, but it will go to 160, 170 in a matter of some time. Yeah. Okay. That's PNBC. RCOM. So still where it was when we saw it last week. We said this is perhaps the only telecom stock which you should not short, right? And just said leave it. And 2-3 days back when we looked at it, I said okay, it's actually gone up from there, come down a bit. Oh, okay, not on spectacularly high volumes, but okay, it's dealing with its 100-day moving average there at 52.10. And for the risk takers, still sticking my neck out and saying you can take long on this. Maybe don't do this in the FNO side, just do it on the spot. put some money on it and leave it. It could go to 60, 70 for all you know, just like that. Something I would, this is a really strong double bottom, 2012, 2016. You'll see that on a monthly chart also there, right? So there is the one bottom there. There's the one here. It's still not turned around, but is likely to, in my opinion. Look at that volume, right? And just massive accumulation, I think, going on. Let's go to the volume thing. Yes, you can also see OBV breaking out of its recent highs. PVT still not doing that, but yeah. Yeah, so if you are a 1 year plus type guy, you can think about RCOM on the spot side. Let me put that here. But and then REC. Alright, so REC 2010, not 2010, 2010. So that's the 256 level that you want to watch out for REC. Again, you can see the good strong buying that's going on. A correction to 200 would be a good place to just enter and but that's a 20% correction that you're talking about. I doubt that's happening. 250, 260 would be a critical place to watch, and once it breaks that, then you will see this jump to 300 and much higher levels, probably 340, 350 also, right? So REC, any correction on REC, use that to enter. Do not miss this opportunity. Right? And then sale. Whoa, what happened in sale? So first of all, it's coming out from a 13-year base, right? You can see this. This is a weekly chart. It's come to that, and then look at the volumes. Wow, this is really spectacular. The volumes are really picking up. This is daily. Yes, just go buy sale. If there's one stock you want to buy, something is happening in this buy sale, and be very patient. Okay, might come back to 45, 47. Today it's just this whole week it just jumped. It's gone from 50, 55 is the next resistance, and after 55 it will just keep going up. It will probably go up to 70, I think, right? Not just 60 but 70. Sale is the stock of today to buy. Oof, I got some more. I thought we were finishing. And then Sri Cement. Wow, what happened to this? I haven't even studied this ever. It's just gone 4,000 to 17,000. Okay, this is a new inclusion in the index. I didn't know when this happened. Where did this company come from? 20 rupee stock is now 17,000 rupees in 14 years, 1.5 decades. Whew. My God. Brr. Okay, I'll need to do some analysis on this before I'll give you my view, but looks like overall you should just keep buying it. Looks like you go to 20,000 before it decides to do anything. Maybe getting a little tired. Okay, overall no opinion on this. Then Siemens, this is again in our capital goods space. I think this is basically getting ready for another move. Right. Sticking my neck out on this one and saying buy with a stop loss below 12.10. That is quite a bit actually, but once it clears 13.50, then we should see much higher levels on Siemens all the way to 1500 and actually much higher, I would think. Okay. All right. So that is Siemens. Then Shriram Transport Finance. So that made a new life high. Okay, that's interesting, but has not been able to break that. So we've had a bearish divergence there on the weekly chart, and then taking support on the old life high of about 1200, 1210, 1300. You could wait and watch if you want. Oh, that's like a double top, right? Okay, it's a whole resistance zone there. Sold off on it's iffy. It could come to 1150, could even come to 1000. Okay, no comments on this. Overall, I would say up, but at this point, I would just say wait and watch on Shriram Transport. Okay, then Titan. We are at a double top on Titan. If it breaks, 500 is definitely coming. Festive season around the corner. A lot of sales will happen on this, I think. Okay. So if it comes to about 400, I think that'd be a good place to buy. 440 breaks, again, not, these are all longer term things. It's not like sale, which is like, a compelling opportunity. This could come to 400 and then go to 500, or it could break out from 440 and then go to 500. Little tough to decide on that. So from a trading perspective, nothing compelling, but from a investor's perspective, sure you could, but maybe you want to watch and wait for 410 or this is an okay place. Okay. Then Torrent. Okay, looks like all the pharma stocks in the mid-cap space just have to be bought. There's no two ways about it. Torrent Pharma, Divis, Glenmark, all close to their life highs. These have done like 2 years, almost of consolidation from just a technical perspective. They're all good opportunities, good accumulation going on. Strong, but some volatility here. So went up and next day got sold off. Some event, some announcement that the market decided to change its view on, and then consolidation, and then ready to break. Next stop, 2,000 bucks for Torrent Pharma. Okay, so that's a buy. Stop loss below 1,600, I would say. Right. UBL, United Breweries, again, is Malia a factor in these things? No idea. I think event risk is still there. Okay, it's gone from 700 to 810, 820. So for that reason, I just stay away from this because of the event risk. Either which way it could do something. United Phosphorus, so it's done a life high. I've been tracking this a few months back. So UPL, yes, I would say definitely can look at buying it. Could come down to 610, right, at 660, 700 next thing, and then slowly 750-ish. Okay, and then finally the last one for today, Vedanta, VEDL. So this has done a really impressive recovery from about 75 to 170. That's a 100% mover already, and is just sitting there. I think deciding what it wants to do next. Some of you might remember the head and shoulder bottom that we spoke about here. Played off extremely well. Now is this setting itself to fall down, which it could till about 160, maybe even 140, or will it consolidate, and then go up? You can also see the falling volumes here, and that is the whole challenge as to what direction. But overall, from a long-term perspective, it is definitely a buy, and you want to just get in whenever you get the opportunity. If in case it comes to 130, just blindly buy it at this point is what I would say. Won't probably get spectacular moves very soon on this right now, but yeah, I think you just hold on and wait, and then we'll see how this goes. Right, 170, 200, 205. Okay, little bit high risk. It's 50-50 here, there, but from a longer term investor, you could definitely look at buying. Right. Okay, so we've come to the end of this session. It's a pretty long one today, actually, but good. I'm glad we did a review of all the mid-cap stocks. So we definitely have some compelling opportunities here. Right. So I'm glad we found these. That's where they are. So yes, either which way. So looks like on the index we've got bearishness setting in. Next week, if the market goes down, these are the ones you should probably be focusing on in terms of if it goes lower, put more of your money into it, and maybe instead of shorting these individually, go and do a review compared to how it is versus the index. Maybe the index short is better, and these shorts, in case these shorts are better in terms of risk reward or better in terms of probability, then you should definitely look at that. And don't forget the shorts on the IT side, right, and private banks, right. Okay, so great. So that's it. So it's been a long session. Thank you very much for your patience and participation. Hope you made money last week. Hope you make money next week, and I'll probably see you again on the coming Friday. By the way, tomorrow we have a free introduction to derivatives course, futures and options, starting at 9:30 a.m. to 1 p.m. at the BIC office. So in case you're free and you want to attend, most welcome. Come with your friends. May have standing room after some time, so come a little early if you want, right? So with that, I'm going to close the session. Hopefully this recording should be available to you by lunchtime tomorrow. Need to convert and upload and then send you the links. So great. So thank you very much, and again requesting you to maybe give me a call or just write in with how you think about the new IMR in terms of part 1, part 2, or not a new IMR, but splitting it into 2 parts and then having separate webinars for that. Thank you. Good night. Have a great weekend. Long weekend. Take Monday off. 4 days. Have a good time, and we'll catch up again. Bye.